Hey there, and welcome to Next Level in Charleston, South Carolina. My name is JD McNair, and here we will talk everything from real estate sales to the hottest restaurants and special events in the Charleston area. You can catch up on each episode on iTunes, Google Play, and Facebook. Welcome back to another episode of Next Level. I have a very special guest host here with us today. His name is Brian Tranchida. He's with... What's the name of your company, Brian?
Coastal Funding Corporation.
Great. I have one startup question for you. Where were you in 1986 at 10 p.m. on Saturday the 5th?
I think I was in history class in middle school. I think. But don't quote me on that.
Okay. Well, we're here to talk a little bit about mortgage stuff today. People always ask, what's FHA, what's conventional? They're not really sure if they qualify for one or the other. So we brought an expert in. This is what he's been doing for how long?
Just over 17 years, 2002.
Wow, 17 years. So I think he knows what he's doing. Brian, go ahead and tell us a little bit about a person getting a mortgage for the first time.
Well, there's various different options out there as far as whether it's first-time home buyers, veterans, depending on locations of where people are buying. There's what we call rural housing, USDA. It's typically in the outskirts of the cities. Not so much right here in the downtown area of Charleston. But again, there's the advantage of being a mortgage broker. I work with about 30 of the nation's premier wholesale mortgage lenders. So with that being said, I've got a lot more products and programs than maybe one of the big banks are going to have. They're pretty much limited to one set of rate sheets, one set of guidelines. So I can typically do loans for people, maybe lower FICO scores, people that are trying to buy on the higher end, where a lot of people are capped to the conforming loan limit of $484,300. I can actually do conforming loans up to $726,000.
Oh, that's a big difference.
Big difference. And it's do up to a 90% loan to value on those with no mortgage insurance. And still get conforming rates.
Wow, that's impressive. What do you do the most of here in the Charleston area, or is it a mixed bag?
Predominantly here, majority is conforming. I do a lot of VA. We do have a lot of veterans in the area, so I do a lot of VA. And I do also have a lot of first-time home buyers doing FHA. But most of it, I would say, is definitely FHA, VA, and conventional. More the traditional style loans. But I do also have options for what we call Alt-A or non-QM programs. And they are alternate forms of income, like bank statement programs. So there are a lot of self-employed businesses, as you know, around here. A lot of self-employed borrowers. And, maybe they've been in business for a couple of years and they don't have a way to really disclose all their income or haven't been able to, or they're not showing as much. We can actually use 12 months of their personal or business bank statements to verify their income. So, again, just different ways to get creative with lending, some of the new products that are available.
Okay. So run me through, let's say, I'm in the real estate business and I have a client that's coming in and they're buying a house and they don't have that much money down. I know that probably makes more sense to do an FHA mortgage for them if they don't have a lot of money to put down. Run me through the part where I say, okay, Mr. Miss Buyer, let me get you in touch with Brian, our lender here, and let's get you pre-qualified. So what do they need to get you, and what does the consumer need to know about getting started in the process, and kind of give them a timeline of how long that whole thing lasts?
Yeah, to do the pre-approval actually does not take very long. There's really two different sides that I'm looking at when I'm going to pre-approve somebody or not pre-approve them. It's really two things that I'm looking at. One is credit worthiness, see where their credit profile is. Does their credit warrant a mortgage loan? The other thing that we're looking at is their income, making sure that their debt ratio warrants, again, they have enough money coming in to justify the new debt and the payment that's going to need to go out on a monthly basis. So I look at those two different things. And again, when you're asking about first-time home buyers, FHA is traditionally thought of as the best first-time home buyers. And it is a very, very good one, and it is a lot of times. Typically, it's better for people maybe they've had some credit issues or troubles in the past where maybe their scores aren't stellar. But Fannie Mae and Freddie Mac both offer a first-time home buyers program. Fannie Mae's is called the Home Ready, and Freddie Mac's is called Home Possible. They're both only a 3% down option.
So instead of the 3.5.
Instead of 3.5, it's 3% only.
Mm-hmm.
There is an income limit on that, though, in certain areas that if you make too much money, you get bumped out of that program. So it depends on the areas. Most in this area, it's $67,000. If you make more, and again, that's household income. So if you and your wife were buying a house together, they're going to take both of your income. If the loan's going in just your name, it's only borrowers on the loan. So, but there are a lot of areas around here that have no income limit, so you can make hundreds of thousands of dollars a year and still only do a 3% down program.
Okay.
But as far as doing the pre-approval process, typically I spend a lot of time with my clients up front, kind of going through, learning them, seeing what they want to accomplish, what their goals are, go through and kind of gather just some information. At that point, the things I'm going to need, the only thing I need to get a loan into underwriting even is their last 2 years of their W-2s, 2 most recent pay stubs, 2 months of bank statements, and a copy of their driver's license. That's all I need. But typically what I'll do is I'll run through and get their credit accessed, figure out what their monthly liabilities are, plug in the proposed payment on the new house, and make sure that their debt ratio will qualify, so I can then let them know, hey, your ceiling is X. As long as your mortgage loan doesn't exceed that, you're fine. A lot of people do get confused and they say, so I can buy a house for $300,000, let's just say. And I'm saying the loan can go to $300,000. So a lot of people even in the industry will be like, so they can buy up to $300,000? No, they can borrow up to $300,000. That's what I'm qualifying them on. They want to buy a house for $500,000. If they have $200,000 to put down, they're only borrowing $300,000. So I'm qualifying with the max mortgage they can qualify for us.
Okay. So give it to me again. You need 2 tax returns?
If they're a W-2 employee, I just need their last 2 years of W-2. So 17 and 18's W-2s.
Okay.
The one-page W-2.
And then 2 years or two months of bank statements.
Yep, and the 2 most recent pay stubs.
Okay, driver's license.
A copy of the driver's license for the Patriot Act, so I can verify their identification.
Make sure it's really them.
Yeah,
they'd like to know that.
Yeah, it's good to know. I want to make sure that it's not ISIS buying a house.
Perfect. So after that gets put in, you get them pre-approved or basically approved, then the other steps are let the real estate company who's representing that buyer go through the inspection period and their CO 100, which is the termite pest inspection. Mm-hmm. And then that's when you typically order an appraisal. Is that the next step?
Yeah, what I would do is, we kind of got a little ahead there. I would typically get the pre-approval process going, okay. Get you pre-approved. Uh-huh. And I can typically do that in 15 minutes.
Oh, wow.
And then what I would do is I would then report back to my realtor or my referral partner and say, hey, they're good to go up to X, whatever that number is. You all go out shopping. Okay. And once you get under contract, that's when I would take the documentation we just talked about with the purchase contract, submit that to the lender. Typically, I get loans underwritten in about 24 hours. In that meantime, y'all are doing your due diligence, doing your home inspections and all that. I will normally wait. Me personally, just the way I do it, I wait to order the appraisal until we have the conditional approval from the underwriter, and y'all have finished your due diligence and made sure that you've come to some sort of an agreement. You are moving forward with the house. Again, that's just to protect my borrower's wallet, to make sure that they're not spending $480, $500, whatever it is, on an appraisal on a house that you want a backing out of. Now they have an appraisal on a house that they didn't need an appraisal on.
And then they just spend all that money.
Yeah. So I typically will wait till I get the green light from the realtor saying we're moving forward. I'll order the appraisal. Usually I'll have the appraisal back in about a week.
Okay. Now, is it true what they say by the time you go under contract until the time you close that there's a couple things you shouldn't do?
There's a list of things you shouldn't do.
Shouldn't?
Should not do, correct, yes.
Like buy a boat?
Like buy a boat or car or furniture. That's one that I get. A lot of times people will call me and they'll be out and they're like, oh, we found this furniture store and they're doing 0% financing, but you still have a payment. And so, yeah, don't buy anything without talking to your mortgage person first.
Has that ever been a real problem?
It's definitely been a problem, for sure. I had somebody who, for example, had a car that they were financing, not leasing. They only had 6 payments left on their car. I can exclude that payment if there's less than 10 payments left on it. So that's how we had them qualified on the house they were buying. Well, they went out and bought a new car. Ooh. Now they had 60 new payments. That now has to be counted in. They're like, well, I assumed I had a payment. I said, don't buy anything. So yes, there's times where that happens.
Okay. And then after that, the final step, we're an attorney-closed state in South Carolina. So for those people who don't know, the attorney has to perform the closing. They do the title search and and prepare the deed to be transferred to the new owner. And how long does that process take from when the attorney gets all the information and we set the closing date and the package? This is big confusion is, how much do I bring to the closing table? I haven't heard yet. And it's usually a last-minute number. And explain to them the reason why there's a little bit of that mass confusion last 5 days or
Sure,
so.
absolutely. There's a lot of hands that are in every transaction. It's not just, a lot of people think, it's that the lender, as us as the lender, we know all the final true numbers. And you got to remember, there's a lot of different hands in the pot. You've got, appraisal invoices, you've got credit report invoices, you've got title searches and title insurance and the attorney's fees, and there's a lot of different things that have to be calculated in per diem days of interest, and the attorney really kind of calculates and hones in those final numbers. They're the ones that are collecting all the funds. They're bringing, the wire that we send for the mortgage, money that the borrowers are bringing to the table. They're then giving the money out to the realtors, to paying off the existing mortgage, paying off the seller, whatever it might be. So a lot of times, if the closing date is going to be in the next few days, but they haven't decided exactly when they're closing yet, those numbers change every different day that we close. The numbers change slightly. So once we have the clear to close, we get the closing disclosure out. The attorneys then will collaborate with the funder, get those final numbers, and get them out. We try to get them out with as much time as possible, but you are correct. Sometimes it's
The fire drill.
It is. And again, a lot of times it's not my fault. I've got a closing that's happening in 2 hours right now. We had everything all set on Tuesday, and yesterday we were waiting on the attorney to collaborate. They were busy. They didn't have time to touch the file till this morning. Well, fortunately, this was a VA loan, and the borrower's actually getting $252 back at closing. They don't have to bring any money to the closing. So,
nice.
So they're actually leaving with new keys to their new house as well as a check.
That's great. Well, I know we could talk about mortgage stuff forever because there's a lot of intricacies and there's a lot of different things that.
We'll have to do a part two.
Well, let's do a part two. Definitely. Maybe next time we do a part two, we'll bring some more guests in here and we can tell some funny stories about mortgages.
Oh, it's always a good time.
Well, it's good seeing you. I appreciate you coming on to the podcast today, Brian. Have a great day.
Thank you, sir.
Well, that's it for today, folks. Join us in 2 weeks for another episode of Next Level in Charleston, right here on iTunes and Google Play. Leave comments or questions about the episode, and we'll be happy to answer them for you. If there's other things you'd like to hear in the future, please let us know. Check out our page on Facebook and Instagram. Stay cool, Charleston.